There is a popular saying which goes, informed decisions lead to better outcomes. And ladies and gentlemen, the trading game is no different. One of the very first things you're gonna have to do when you come into the market is to identify the bias for the day. Who is in control? Whose market are you walking into? And this is something you have to do whether you are a swing trader, whether you are a scalper or a day trader. And in this video, I'm gonna be walking you through step by step how to do this in a seamless and effective manner. But before we get into this, ladies and gentlemen, I am proud to announce that the Live Free FX community is now open. Click the link below to get a live private chat with myself and other like-minded traders, weekly live trading sessions, regular trade ideas, the accountability room, which is going to keep you accountable and help you stay on track with your trading goals, and ask me anything in our weekly live webinar. Click the link below to become a member. Now back to the video. When you come into the market and you're trying to establish a bias for the day, there are some key steps that will make this process simple and seamless. The very first thing is to understand, as retail traders, we don't move the market by any means. So we have to follow the big boys. We have to follow the institutions, right? The hedge funds, the banks, and they essentially work off the higher time frame. And what we have to do is we have to pay attention to the higher time frame to gain a long-term picture of where price is, right? So your higher time frame will act as your big picture time frame. It is not your execution time frame. Your execution time frame will be your lower time frame, which would be the 5 minute, the 1 minute, or even the hourly or 15-minute time frame. Whereas your big picture time frame will be the daily, the weekly, and the 4-hour, even the monthly, depending on how far back you want to go. And what this simply allows you to do is it allows you to stand at the peak of the mountain and gain an overall view of what is happening on just the higher time frame, so you can execute based on that as you scale down to the lower time frame. I'll show you exactly what I mean here. We're taking a look at euro dollar right now on the daily time frame. We can take a look at the weekly time frame as well, but the daily time frame a lot of the time will give you just as much information. The weekly time frame is also good as well, and I recommend also starting off of the weekly time frame, sometimes the monthly time frame, but the daily time frame is good in this case. So we can say you start from the weekly time frame, but the daily time frame is just as good. So we're going to be using the daily time frame because we're trying to establish our bias for the day. And what we can see here with euro is that overall price is moving largely in a range, right? The market is not trending higher. We have been sort of within this consolidation range for the last little bit. But nonetheless, you have to still pay attention to the minor details. And when you come into the market, the very first question you want to ask yourself for that particular day is, whose market am I walking into? Am I walking into a buyer's market? Am I walking into a seller's market? One of the criteria that you are going to need to understand is that in a buyer's market, right, price is making high highs, high lows, high highs, high lows, high highs, and high lows. These are characteristics of a buyer's market. And this is what we see, as price is moving higher right there. And when sellers come into the market, price starts to make lower lows right here, and ultimately lower highs, lower lows, and lower highs. But what buyers are doing is they're targeting the highs as price is moving higher, and what sellers are doing is they are targeting the lows, right? The highs are the target for buyers and the lows are the target for sellers, and these are your objectives. So when you're coming into the market and you say, okay, well, taking a look at this case, let's just remove all of this. So taking a look at euro right now, we can say that, okay, right now, based on what we see, right, the last couple of days, buyers have been dominant. The bullish momentum is quite strong on this pair, but you're still paying attention to the fact that, okay, sellers took out the low. So there still is a large possibility that we could get more sellers coming to the market at a later point. But as of right now, you're taking a look at this right now. And what we see is that buyers are now making high highs and high lows, high highs and high lows. If you want to be a seller, the best case scenario is to wait for sellers to essentially make your first move. That's my philosophy in trading. Always let the market guide you. Always let price tell you exactly what it wants to do. So when you're taking a look at this, right, and you're coming into the market, maybe like the following day, you know that ultimately you want to be a buyer, because buyers are currently dominant right now. So when buyers are dominant, what are they doing? They are targeting the highs. So that's the next thing. If you're coming into a buyer's market and you know that buyers are currently in control of that market, you want to be a buyer for that day, and you want to establish various points of liquidity that buyers can target, and this would be our closest point of liquidity. And if price is really aggressive, price can ultimately target this level as well. Now, with that in mind, you can scale down to the lower time frame, and you have your higher time frame objective in mind. You can obviously also scale down to the 30 minutes. So then we can go over to the 1 hour time frame just to gain a larger perspective of what is happening. And what we see on the 1 hour time frame is that, okay, we have our daily high right here that we are likely going to be targeting at some point in time when we want to be a buyer. And what we see here is we're still paying attention to the market structure, right? And we see that price is making high highs and high lows, right? The market is still making high highs and high lows. That's mainly what we're looking for as we're scaling down. We want to make sure that our execution time frame is in line with what we see on the higher time frame, and that's essentially what we see here. So we know that price is making high highs and buyers are still showing your dominance, and we can say, okay, you know what, this is a low right there, and we can scale down to our 5 minute time frame. And the next thing is, I am a firm believer in showing up at the same time consistently. If you're trading a pair like Euro USD, you want to trade that pair during the London session or the New York session. It moves extremely well. So when you're coming into the New York session, so I live in Eastern time zone, so I'm likely going to be trading the New York session. So I'm coming to the market at about 7:30 Eastern. And right now we are at 7:20, right? So 10 minutes, I come into the market, and I'm looking to see what price is going to do, whether the market is going to make its first move. I know that as long as this low is still holding, I want to be a buyer, right? But I want price to give me an opportunity in order for me to get involved in the trade. Right now, we're just essentially ranging. Let's see what price decides to do, whether there's going to be any buy opportunity. Right now, on this 5 minute time frame, I'm not going to be buying because we have the market structure right now is bearish, right? So it means that there is a strong possibility that we could see more sellers dominate, because sellers are currently targeting the lows, right? The lows are being targeted as of right now based on the market structure. So there's strong possibility that price could continue moving lower. So for me, what I'm going to do is I'm going to sit on the sidelines and just watch and observe. I know that the higher time frame has a high probability of kicking in at some point in time, meaning that if I am a seller, I am putting myself in a low probability trade rather than being a buyer, which would be more of a high probability trade. Let's take a look right there, and what we see, boom, beautiful. So right now we're seeing price essentially move lower, and yeah, so price is doing this thing, and it's approaching our low. And we're going to see what the market wants to do at this point in time. For me, I'm not doing anything right now. I'm just watching price. We've seen that the market has pulled back after tapping into this level, this zone, but it never took out this low. So buys are still very much in place, and this is about 840. We're coming into the market at 840. What I want to see is the die down of bearish momentum. What we're seeing here is, boom, price traded further down. Did it take out this low? So price failed to essentially take out this low, and now we're seeing a switch from the bearish momentum, right, to the bullish momentum. Look at this candle. This is a beautiful bullish engulfing candle. This is price making the first move, telling you exactly what it wants to do. Personally, for me, this is where I say, you know what, I'm going to go and get involved in this trade and look to place my stop loss at the low if I can. Usually go on average about 30 peps, but I would say around 19 peps or so, which is also why I trade off of the lower time frame, because it allows me to minimize my risk while potentially still aiming for higher time frame objectives. Right there, we're risking about 20 peps on this trade to make about 45 peps or even more, possibly. So we can factor in spread as well and just say overall 20 peps, right? So, or 21 peps. So let's see what price does. The market has rejected, made its first move, essentially traded and taken out this previous high on the 5-minute time frame. So now we're in the trade, we've executed, and let's see what price decides to do. And yes, buyers are now coming into the market, and you have now put yourself in a position where you're riding the bus with the big boys. Personally, for me, what I like to do is I also like to take something off the table at about 30 peps or so, give or take. That's just the way that I manage my trades. You only need to be right just a little bit. You don't need to be right all the way. So I may take something off the table on my position, move my stop loss to break even, trail my my second position as price continues to form new lows, right? So maybe move my second position, stop loss over here, right there. Just see what price decides to do here. Okay, beautiful, right? So that way I can continue to take something as price continues to give if the market is feeling very generous. So that's usually how I like to play things, and maybe move my stop loss right here. A lot of the time I usually keep an open target when I am scalping or day trading. Ultimately, I pay myself very quickly for the time that I've sat in the market, and then I let price give me these nice, beautiful home run trades. I go from a scalper to a swing trader depending on the day. I still close my positions usually at the end of the day. So let's see what price does. If the market continues to give, I continue to take. So right around now, it's late in the day anyway, so I probably would have closed out my position and just I'm done. So what we were able to do is we were able to essentially risk 20 peps, and we ended up capturing 62 peps. This is Euro USD. This is pretty good. If I'm trading gold, this would easily have been 100 to 120 peps worth of move. And this is essentially how we do it, right? This is how we make it work. And this is what you want to do when you come into the market and you're trying to establish the daily bias. Establish who is in control of the market from a market structure standpoint on the daily or the weekly time frame. If buyers are in control, look for the highs to target, right, on those time frames, and scale down to your lower time frame. Wait for price to tell you that it is moving in that direction. If the market structure on the lower time frame is in line with the market structure on the high time frame, great. If it's not, you wait and you observe, and price eventually at some point in time will make the first move. So ladies and gentlemen, this is how you establish the daily bias when you come into the market. If you have a particular way that you choose to establish the daily bias, feel free to leave a comment down below and let us know, because we're all here to learn and grow. At the end of the day, I hope you guys are out there living free. Thanks for watching.